In crypto, we tend to hear that the real money can be made in microcap altcoins. And of course, intuitively, you know, it's easier for a $10 million project to 100x from 10 million to 1 billion than it would be for Bitcoin, for example, to 100x from 500 billion to $50 trillion. It's just basic arithmetic. But there's also another side to it, of course. At $10 million, the project is higher risk. And if it's not a quality project, it could easily go to zero. Whereas with Bitcoin, that's completely unlikely, borderline impossible. So how exactly do you research and select the best projects in that low market cap range? Well, fortunately, we've done that legwork for you. We're looking at 3 microcap altcoins in today's video. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. Small cap, large cap. If you choose to invest in the crypto space, I wish you all the very best of luck. And I do mean that genuinely. But look, I'm not a financial or investment advisor. So as you know, this isn't financial or investment advice. So first of all, small caps and micro caps, when we're talking about this category, we're referring to altcoins and projects whose market values are under $100 million. And these are some of the toughest coins to figure out in terms of selection, because of course that involves research and vetting. It's hard to tell sometimes where the great value is. Many of these bets are on potential because we feel like they're worth so much more than they're currently valued at. And if we're looking at that potential, we need to put the odds in our favor. The first coin that we're looking at today is COTI, C-O-T-I. They do exactly this. It is without question the biggest hyped project in Cardano with its DJED stablecoin. By the way, guys, recently I was talking about DJED, D-J-E-D as DJED. I was rightfully corrected in the comments, so thanks for the clarification there. Cardano's DJED stablecoin. But getting back to COTI, we just recently did a whole video on the topic. Check that out for more information if you're inclined. But here's the thing. COTI's market value is pretty small. Right now at about 9.6 cents as I record, with a market cap, as you can see, of actually over $100 million. That's just recent, $114 million. So they're kind of just outside of that micro cap range, but we'll include them for the purposes of this video. And as we've talked about in the past, I like this video because until the market decides really whether DJED is a success or not, COTI's fortunes are going to depend on Cardano. And if you're bullish on Cardano and ADA, then you are going to be bullish necessarily on its stablecoin development, because you know that every good ecosystem needs one, i.e. a good stablecoin. Plus, projects really are trying to move away lately, you may have noticed, from USDC and USDT for more native, more decentralized solutions. So what Cardano does very much helps COTI. And inversely, what COTI does very much helps Cardano. A relationship like this can be a big risk reducer for a project of this size. Now, look, honestly, if that relationship goes south, well, that's not good, then there's no question that COTI will suffer. But for now, the relationship is working in COTI's favor. I'm also a big fan of COTI because it's an app chain. And app chains, we've talked about this recently, are chains built with a specific app or set of apps in mind. It really just means that they are built from the ground up to benefit and support a specific type of app. And COTI is an application all about payments. Payments, of course, are one of really the few use cases for crypto, arguably, that have already proven to be very successful. We're not waiting and hoping it's going to work out maybe a year, 2 years, 3 years from now. Not at all. The reality is that payments, especially as you know, remittances and cross-border payments, these are already probably crypto's greatest success story. And it should only get better from here. As such, COTI is in a good position to take advantage of the already successful trend that is poised for further growth. All right, our second coin of the day is Unmarshal. This is a blockchain infrastructure project, and Unmarshal uses APIs to query blockchain data, especially NFT data, non-fungible token data. Now, their tools also allow you to build out your own APIs for your project if the available ones that are out there maybe don't fit your needs for one reason or another. And to be even more flexible, if, for example, a project has a specific need, they can pay Unmarshal to build out those tools for them in a very bespoke kind of method, so tailor-made. Now, already it supports 20 different chains. These include Ethereum, Polygon, Algorand, Kronos, Moonbeam, Avalanche, and more. And Unmarshal knows that more sophisticated apps, those that rely on DeFi, maybe that are involved with NFT gaming and metaverses, these need to be able to query data easily, just like other chains do. So this includes queries moving across chains and bridges and multi-app functions. Whale watchers are going to love the token balance and token transaction APIs that Unmarshal offers. These are pretty sophisticated. And I like it for these reasons, but in addition, look, when I say microcap, this one is really micro. The Marsh coin, ticker MARSH, is by far the smallest on this list today in terms of project value. And as long as it's a good project, which in our estimation it is, then it's a great thing to identify a project this small. We are talking $1.3 million market cap. The fully diluted market value is only just under 20 million or so. As you can see, $19.6 million here. So these guys are tiny and their use case is super impressive. As a thought experiment here, just compare that, if you will, with the thought leader in this particular category, which is the Graph. Ticker GRT. And we love the Graph. In fact, it's in our master portfolio and it's the number 41 project by market value at about $1.5, $1.6 billion. If you consider the success of the Graph and where these kinds of projects can go, then you understand and probably agree with us that there's a lot of potential here for Unmarshal. Ticker Marsh. Could Unmarshal become as big as the Graph? Maybe. It could even be bigger, at least potentially. You see, the Graph relies on the popular GraphQL query language, and this makes sense because it's one of the industry standards. But Unmarshal uses GraphQL as well, and it also uses APIs, WebSockets, and other query methods to offer even more options. And this works in the project's advantage. Plus, I also like Unmarshal because, really kind of like everyone at Altcoin Buzz, myself included, we're big fans of blockchain infrastructure companies. Because for Web3 and that whole dream, that ecosystem to become a reality, we need these kinds of companies. And we need more than one winner in all kinds of different categories, including querying blockchain data. There is room for both the Graph and Unmarshal to be winners in this space. Guys, if you are fans of Web3 infrastructure investments, if you're including them in your portfolio, let me know about that in the comments below. It would be a very smart, forward-thinking play in my humble opinion. Our third and final coin for the day here is Trader Joe. Ticker is Joe, J-O-E. Now, as you may know, it's native to Avalanche as a DeFi platform, and now it's also on Arbitrum. Taking a look here at some of the numbers, Aave is by far the largest DeFi protocol on Avalanche. Currently, it holds 35% of all the TVL, that's total value locked, in Avalanche. And after that, Benki, who, by the way, gets most of their volume from liquid staking, they're second, and then Trader Joe is third. It's the biggest native DEX in Avalanche, though. And there's no particular standout project or coin here like COTI has with DJED, but for a, let's call them smaller DEX, like Trader Joe, they do have lots of great farming and pool options, including stablecoin pairs, bridged BTC, pairs with no risk of impermanent loss, pairs like ETH, WETH, and BTC, WBTC, and the option to create your own pool. Now, I like it for a few different reasons. What Trader Joe offers for a DEX of its size is pretty remarkable. It looks very undervalued, actually, compared to its peers when we look at the ratio of market value to TVL. That number for Trader Joe is less than 1. They have $108 million in TVL and a market value of $86 million. So that's a ratio of about 0.8 or so. By comparison, Aave is at 3.6. And at a 3.6 ratio, if you think about it, Trader Joe in that situation would be worth $370 million, or more than 4 times its current valuation. So that's one reason. Another reason why I like Joe is kind of like with COTI and Cardano. A bet on Joe, J-O-E's growth, is a bet on Avalanche. Yes, Avalanche does have other things going on, like its subnets and all kinds of other stuff, but they've said many times that they want to be a DeFi hub. And if that is, in fact, their ambition, Joe will benefit greatly. Lastly, the Joe token has great tokenomics because more than 75% of the total supply is already on the market in circulation. So their growth is real. It's not manufactured. It's not the product of low float in the market. It is organic. What do you think about our choices here in this video? Personally, as long as the project is high quality, as long as you do your research and vet the project, it's very beneficial from an investment perspective to go after low market cap and ultra low market cap projects because the potential returns are just that much higher. They're astronomical in some cases. And look, everybody has their own approach, but personally, I like the idea of planting a lot of seeds and getting after that 100, 200, 300x explosion in just a high quality project that you have confidence in, but maybe the rest of the world hasn't discovered yet. Let me know your thoughts on this one. I'm especially curious to hear your suggestions as to what we've left off this list that you have your eye on currently.